It's been a very eventful week in the gold market. It could even be said that it was a week of two halves, to paraphrase Bank of England Governor Mervyn King's speech earlier this week. The early week was very, very sideways trading, but the dividing line came when Ben Bernanke delivered the FOMC minutes. Bernanke didn't surprise in saying that the Fed may start to taper off its QE program, but what did catch the market offside was that the Fed may actually bring the QE program to an end by the end of next year. This was much sooner than many expected, and it sent shockwaves both through equities and the metals, with gold in particular losing a lot of ground. The metal dropped to 1269 earlier today, but it's since recovered a little bit to about 1294. As has been the case in recent weeks, the tussle has been between paper sellers and physical buyers. And there was a lot of interest to see where the physical buyers would come back into the market. Now, speaking to traders across the globe this week, it looks as if the current level of physical buying is pretty strong around 1291 to 1294. Although we'll have to wait until next week to see whether this is where the sustained level is going to be. One aspect that's been missing from the physical market is India. Indian demand has been hard hit by higher taxes on imports and by a very weak Indian rupee. Now, looking across the rest of the complex, silver again was a very big loser, falling to below $20 for the first time in 2.5 years. This is no surprise really, because silver has always amplified moves in gold. Palladium has also had a very, very rugged time. However, the metal managed to gain about 3% so far today. This is Eddie van der Walt signing off from the floor of the LME.